Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. I'm Phil Carroll. Today we're joined by Colin Bird, Executive Chairman of Galileo Resources. Welcome back, Colin. How's things?
Things are fine, thank you very much. And how are things with you too?
Yeah, well, I've just landed this morning, so I'm a little bit jaded, obviously from the Zambia and the Indaba trip. Just want to say thanks very much for your hospitality on that. It was most welcome and very much enjoyed seeing it. It's as you said earlier on, it opens your eyes up. It's easy to sit here in the comfort of your warm office, but when you're actually kicking rocks on the ground and seeing what goes into these, processing plants and all these sort of mines and early stage operations, you take a lot of it for granted. So. Yeah, very much an eye-opener for me.
We're currently sitting in Indaba, the conference. So I've just been walking around the halls there and talking to a few of the miners that are on the London market. So, yeah, Zambia was very interesting to see. Yeah, those plants are quite a structure and, a lot of technology, a lot of chemistry and a lot of hard work goes into, producing the metal or a concentrate, whichever way in the end. Yeah. So it makes you realize it's not just a ticker that somebody buys and it should go up. No, there's a lot involved in getting it from A to Z. But when it does get from A to Z, it's going to make a lot of money. And that brings us on to the announcement today, Colin. Luansobe, what a tremendous announcement.
Yes, a tremendous announcement. It really ticks a lot of boxes. At the end of the day, 5.86 million tons represents a significant operation. 10 years at 600,000. It certainly isn't Mickey Mouse. It's a proper operation. The material is away there now for testing to see if we can upgrade it. And we're pretty sure we can. So, you don't want to transport 1%. You want to transport 5-6%. So we're pretty sure we can upgrade it. Then, of course, when I looked at the ore body, when we first acquired this, it was evident it was very well drilled for the first couple of 100 meters. Lots of prognosis on what it might be, what it could be. And one hole down as far as 1,250 meters showed a very good percentage. And I had this vision of an open pit, which could go into a decline. I had nightmares about having to start a decline from surface and going down 200 or 300 meters before we got into any ore. But and of course, I wouldn't go so far as dream. You can't dream with shareholders' money. But the indications were that we could develop an open pit and that we may use that open pit as an access to further ore. And I wasn't too happy either with the prospects of a 30-meter pre-strip. So we went and did what a lot of majors might not have done. We went and drilled a substantial drilling program, which we extended beyond the confines of what might be the open pit. And of course, the net result is what you see now. The net result is that pit, I think we started in the old days being about 8 months ago, year ago, of 3 million tons is now the best part of 6. We took the overburden down from 30 meters to 20 meters of surface, and some more closer to surface, which we'll be able to stockpile as we take away the overburden. And then you'll see that we've got 6.3 million tons, which can be taken from the open pit. So the prognosis that we open 2 big declines and truck out from an underground operation through the open pit, which will be depleted by then, of course, and works well. And then available to that is between 3 and 7 million tons. So add that up 13, you're into 80, you're into about, you're getting towards 20 million tons now already. And if you remember, I started with that quite high prognosis of 70 million tons. The drilling is sparse as one gets below 500, but it does definitely show what you've got here, that the propensity to build up something quite big or big in today's terms is definitely there. But what I do like, and it fits in with our model, our general model, is that to find something where you can actually get into cash flow pretty quickly. Of course, the mining business is not that fast, so pretty quickly. And then thereafter, prove up something which might be a whole lot bigger than what you start off with. And that was what I sold. That's what Galileo sold to the market. And of course, that's what we're delivering to the market. And it's always good to have a correlation between projection and delivery. And I think everyone will give us the benefit this time round that what we suggested we might be doing is in actual fact falling into place quite nicely. So we're going to continue with the same strategy that we would develop from the open pit. But equally, of course, one doesn't know what the copper price is. And, cutoffs change as the price goes up, which we're all expecting. And so what might now be a pit bottom might not be a pit bottom in a year's time. And so we may be able to take that pit down further. And so if we take it down further with an open cut, then obviously we'll be taking less from underground. So it really is a very, very good developing situation. As I say, we've sent the sent some core off for analysis to see whether we can upgrade it, how much we can upgrade it. But, we're getting enough there if we've got to build a dedicated concentrator. It's the size of the deposit is already able to justify that. So we're very, very pleased with it, Kevin and Phil. We're very, very pleased with it. And then, the next part of the equation is to send block models. So the open pit bidders can actually work out their mining plan with us, and we've got to make the final decision on process route. So in a way, this is delivering to the market what we said we would deliver, and it is very promising and, represents a company in these distressed times, which is moving forward its projects in a very significant way.
So, Colin, this time next year, when we're in Indaba time, do you expect that you will be having cash flow from Luansobe?
Good Lord, yes. You'll hopefully see an operation in full flow, delivering value to shareholders. Of that, I'm sure.
Very good. So, the revenues, when you're talking about 50,000 tons, it's going to be 50,000 tons a month?
That's right. It's 60,000 tons a month. Of course, if we upgrade at site, we'll put 60,000 into the plant at site. That will have its own recovery. Because, if you take it up from 1% to, say, 5%, you'll probably recover 75% of it. So that'll be the operation. And then you'll be shipping that 75% off to a processing plant. Yeah. If we go to a processing plant, of course, our upgrade facility will cost, $2.5 million to $4 million. And you'll have an agreement to get to final concentrate with others. That really is the dream ticket when you think about it. And of course, if you build your own dedicated plant, it will cost more and take a bit longer, take quite a bit longer. But we're fairly convinced at this stage that it's upgradable. We can make a nice product and not too many surprises here, that it is only 9 or 10 kilometers from muffled area, which would work for 100 years. So the metallurgy is pretty well known, and it is very amenable to froth flotation. It is very easy to separate from its host. So we've not got too many fears there.
You upgrade the ore to 5%. Then you're obviously going to be transporting via road, I presume, maybe only 12,000 tons of actual upgraded ore instead of, trying to truck 60,000 a month.
Oh, no, I'm expecting a much better recovery than that. I'm still expecting to transport about 40 to 45,000 tons per month, but it's an higher grade, of course.
Okay, so that 45,000 tons will be at 5%, or roughly.
That's what I would be predicting. The usual uplift is 4 to 5%. What I forgot to mention to you guys is that during this work that we've done, I think we have mentioned it to you, but we went to the old core, and there was some black shale there which nobody had looked at before, and we found that is ore bearing. As high as 2% in places, metal bearing. And all of that went into the open pit, of course. So it was never even considered in the first prognosis. Now it's part of the open pit resource. It's a black shale we should never think would be copper bearing, but it is. Yeah. And so that was a bonus we also received during this exercise. I would argue that we're being very diligent at a level which sometimes the majors aren't. We've taken this deposit right through to surface.
Sure. So, Colin, I mean, looking at the reaction, obviously, when that was announced this morning, it started trading very positively, moving up, and then around, sort of around the midday point, it's sat around, 4 or 5% down. What do you think the market is missing from this announcement? Because it's always nice to see an inferred JORC report there going out for a project that's been around for a while. But do you think the market has pretty much just not understood it? Do you think that you could put it in layman's terms where we are with this project now?
Yeah, I just sometimes wonder, we are in extremely difficult times. We're not in a time of great confidence. Smaller caps are not in favor, even though our investors know that they're in a venture capital market. The rewards can be very high, but also the rewards or the risk of a venture capital markets is higher than if you buy Marks and Spencers. And I feel that there's a lot of risk aversion out there. And also, I think that there's been a lot of losses and probably people are taking money off the table. What I do know about Galileo is that there are more than one, and there's a number of very analytical gentlemen, ladies, who essentially look at our results, really understand our results, take them down to the constituent parts, and share their thoughts with other shareholders on the bulletin board. And they understand, because I looked at the bulletin boards today. They've got it. There's no doubt in my mind at all that one gets the odd person who I don't know what their motives are. I don't know what drives them. I don't know what their investing philosophy is. But anybody who wants to invest in a portfolio which has got a very strong asset base, on its way to cash flow producing, met all of its projections of a year ago or 8 months, 10 months ago, and are well on the way, and has got a basket portfolio of lithium, nickel, copper, and other high-class copper projects. To put it down on the back of an announcement like this does surprise me. I was going to say depresses me, but I've been around long enough in this business to know there's no point in getting depressed. Control those things you can control, Phil and Kevin, and we'll continue to deliver to shareholders. And in these difficult times, if I sit watching my share price and getting depressed and despondent, I won't be giving the loyal shareholders the support and attention they need. That's who I work for. I work for the girl and for the guy who said, right, I like this company, I like what they're doing, I like the portfolio. And they know that the mining journey, there's always a few cul-de-sacs on the way where one has to navigate. But at the end of the day, if the company's art is in the right place, they've got the right technical team, and they pick their assets right, then of course there will be a return to shareholder value. And we all know that the returns in the venture capital markets are much higher than they are in large established mature markets. So I think this is a long-winded way of saying I try not to watch the share price. I try and do what I do as well as I can, as does the rest of the team.
Yeah, one of those people you were talking about, analytic, who's very switched on and knows the project, was basically estimating at 9,000 copper, there'd be $22.8 million for Galileo, 9,500, 24 million, and at 10,000 copper, 25 million per annum. I reckon that I think the project should produce $20 million or more, between $20 and $30 million a year. This makes Galileo share price absolutely laughable if that is the situation this time next year.
Well, that's right. And, I'm not allowed to make forward statements, but as you quite rightly point out, the process is tons, times grade, times recovery, times price, and making an assessment on what the margin might be. So others can do that, as well as the board of Galileo can do that. We're fortunate enough to have a board and people who, I've looked at these boards in various companies, and it's good when you get a board which is sort of kind of does the journey, takes the journey with you. And is able and analytical enough and experienced enough to, I wouldn't go so far as to say advise the others, but certainly to take what is sometimes, we have to be very more technical than we want to be, but that's the requirements of the regulators. And so it's good that someone can take a pretty technical report and turn it down to what we're all here for at the end of the day, money, and turn it down and say, what does it mean commercially for the company and us shareholders? I'm pleased to say our board has got a number of people who can do that.
you're ridiculously priced now based on those results. You should be several times higher than you are, and let's just hope the market starts to realise that and adjusts.
Sure.
Yeah. And that's been said now for about 2 or 3 years about Galileo. It still labours along at about 1 to 1.2 to 1.5, and I've seen a re-rating due to the world re-rating. I mean, this world of ours now has got headwinds like I've never seen before in my life. We have wars, we have the threat of wars, we have inflation, we have terrible events happening all around the world. And we have this Ukraine situation escalating by the minute, really is escalating. So it doesn't surprise me that people aren't just full of confidence and going out.
Sat with the FTSE at all-time highs. It doesn't, and majority of the FTSE 100 is made up of these miners, these mid-tier to sort of, large-scale miners. So it doesn't seem to ripple through yet to these junior and these nano-cap miners, does it?
Bill, it doesn't work, It doesn't work, you see. You're so right. Every man, all of the chairmen, chief executives of the major mining companies saying, I don't know where the copper's coming in 2027. The analysts, the big boys at Goldman Sachs and JP Morgan are saying the same. Anybody who's informed this industry are the same. Even the people who need it are saying the same. And my history has been that the juniors are the pathfinders, if you like, and they're the call option for copper. And if gold's on a run, they're the call option for gold. But we're not talking anymore about a super cycle. We're talking about an industrial revolution type situation where the world has changed. The demand for copper, you need twice as much by 2030, twice as much. And there's no hope of getting it. You're having company by company reporting for next year, their copper production will be down. So where history, in my history anyway, we've always been the call option for the commodities. Nobody does that. And and Kevin knows because you've been down the Indaba. All the big boys have got their scouts out there talking to the likes of Galileo. And I won't mention other companies because it's not my job to mention other companies. But, our companies were involved in copper, involved in lithium, involved in nickel, involved in vanadium. People want to talk to us. The traders want to talk to us. The car makers want to talk to us because, we're almost getting to that situation now where the trader, I'm not going to say is redundant. They'll never be redundant. They're massive. Some of these businesses are massive, the metal traders. But, the battery people nowadays, they're more worried about stability of supply, continuity of supply, sustainability of supply than they are price. Because you watch the telly, every second advert nowadays is you've got a picture of a Volkswagen, or a Mazda or whatever it is, their new electric car. They're frantic out there now. We're trying to wonder where the copper's coming from, where the lithium's coming from, where the nickel's coming from, cobalt. Where is the cobalt coming from? So there's such a disconnect that it escapes me. Even with all this, as I say, the adverse winds around us. So, I'm not allowed to give investment advice, but if people want to be in this venture capital markets and the specific part of it of natural resources, they should be taking a close look at the likes of Galileo, because that's the membership of a good club. If you've got a share in Galileo, it's the membership of a mixed asset base in new age metals, as is a number of companies I'm involved, as is a lot of companies on AIM. But we're not getting that recognition, Phil. We're not getting that recognition, Kevin. I've almost done trying to guess why. I'm just heads down, getting stuck in. Because you know what we say in Yorkshire? It's never, it's always darkest just before dawn.
It'll turn when you least expect it, won't it? That's usually what happens with these stocks. So, but I think on that note, now we've put the world to rights, we'll wrap things up and say, Colin Bird, Executive Chairman of Galileo Resources, thanks very much for your time.
No, thanks for listening to me. Thank you very much indeed for listening to me. And I'm very pleased with this, and I'm very, very pleased for our shareholders. It's a good, positive result. It's a box ticked. And let's get on with ticking some more boxes.
Yeah, well done again.
Thank you very much.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.